Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what do we talk about? Well, this week I want to talk about trading hot IPOs, and I'm going to show you one or two of my favorite patterns there, and then I want to jump out into the ACP platform and find some. Now, I like to keep my content evergreen, and I know that the people at StockCharts.com also like me and others to have evergreen content. So what I want to show you is not so much finding the hot IPO right now, but how to find them and what to look for. Now, to make a lot more sense once we get through the slides and into the charts. Also, it's kind of like, as Murphy would have it, everything kind of changed right before I began recording. The market didn't take a little bit and all, but the good news is what I'm going to show you today will work in the future. I want to follow up a little bit on if I could do it, so can you. I have two mystery chart reveals, and also I want to talk a little bit about recent IPO trades when showing you what to look for. Housekeeping, I do take requests. If there's something you want me to cover, I would welcome it. It'll make my job a lot easier knowing what I'm going to cover. If it's something that requires a lot of detail, what I might do or could do is cover it in my Thursday show, Dave Landry's The Week in Charts, easy for me to say, where the format is a little bit more free form. If you need to reach me, davelandry.com/contact. If you want the slides from this presentation, all three of my books in PDF format, and enough stuff to keep you busy for a long, long time, davelandry.com/StockCharts. All right, so let's take a look at a couple of mystery charts. Last week, I showed this mystery chart, and the chart is VZIO. It's an IPO, and here's the parameters down here. Buy at 23.50, stop at 20, IPT of 27 for a risk of 3.5. And you see I have it as an IPO first pullback. It's also an IPO first deep retracement. I'll show you what that is in just a second or two. This is my daily trading service, by the way. If you want to take a look at this, take a look at the archives going back many, many, many years. I think I have a decade out there or so, maybe a little more or less. I know there's a whole about 5 or 10 years ago. But anyway, long story endless. This is my daily watch list. If it's checked off, it means it's a potential short. It was kind of small on this particular day, not a whole lot to watch because the market hadn't pulled back then. And these are the stocks in the open portfolio. It's all hypothetical, but I do actually take these trades and I mimic this portfolio to the best of my ability. In other words, I just follow what I say. I don't do that in all of my trading, but I do that with all the recommendations on the service. So this stock comes public. It makes a really nice rally higher, and then it begins to pull back. Now, this is the first pullback, and in this particular case, it's deep enough for what I would call a first deep retracement. And that's just when the IPO gets a little bit ahead of itself, comes back in sharply, and then hopefully begins to take off again, and we get long and stay long for a long, long time. So an entry would be here, stop will be down here, as I just showed in the spreadsheet. Initial profit target up here. Let's see what happens. Triggers an entry. Yay, it looks like it's a takeoff. Then it came back in a little bit. So we're just kind of waiting, and I hate to use the word hope, but hoping on this one. And we have a stop in place just in case. Let's take a look at another one. COUR. This was from last week also. This is our mystery chart. Nice thrust higher, followed by a fairly deep retrace. First pullback slash FDR, our first deep retracement. Here are the parameters down here. We're going to buy at 55, stop at 45, IPT of 65 for a risk of 10 points. That seems like a lot, but that's what it calls for. So let's take a look at what happened. Again, stop down here, IPT up here. So not much at first, and then it just continues to implode. So it didn't trigger, and I actually took it off of my watch list last night. Today is April 20th, 2021, for the record. And the reason I took it off was because it did not trigger. It began to fail, and it made almost 100% retracement. So no trigger, no trade, next. And what amazes me is how many times waiting for an entry, go in and watch the shows we've done on money management, and if you really want to dive deep into it, go in and watch the money management module under the members area of my website. Now with IPOs, I want to talk about trading the first deep retracements, first pullbacks. And the first pullback could often be a first deep retracement too. And the buy at B pattern. The buy at B has become extremely popular. And basically, with the buy at B, I was thinking, okay, IPOs don't have any bad memories. What if you just bought them when they make a new closing high? And that was the original premise. And there's a lot of caveats to it. I'm going to try to show you as many as possible today. But that's the main crux of the setup. Now, in addition to the caveats, there are some specific rules when it comes to trading IPOs, and specifically the buy at B pattern too. One is we won't buy an IPO until at least the close of day 5. So if an IPO comes public on Monday, the earliest that we could possibly buy it would be Friday by the close, or at the close, I should say. A lot of people all excited, hey, coin's coming public, what do we do? It's like, leave it alone for 5 days, and then we'll figure it out. We'll take a look at coin in just 1 minute too. Day 1, Day 2, the other rule, or one of the other rules, one of the other caveats, is if day 1 sets the high for the week, it not only has to close at a new closing high, but it also has to close above the day 1 high. As you can see in this particular case, day 2 closed above the day 1 high, so the day 1 high rule is no longer in effect. If you go in and watch a bunch of weekend charts, and if you go to the members area on my website and go through all the IPO stuff, especially the Q&A, you'll see a lot of these examples and it'll make a lot more sense. Day 3, day 4, day 5. So the earliest we'll buy it is day 5. Now on this particular day, it did close at a new closing high, but I wasn't that excited about it because the range was a little small and it just barely closed above that high. I like a day where the close is definitive, is very definitive, I should say, and it's as a new closing high. So if you take a look at day 6 in this particular case, the range began to expand higher and it closed at a brand new high. So I like that stock on that day. What happened the next day, comes right back in, beginning to hate life. In my more active account, where I sort of keep things on a short leash and I'm super duper active and I don't like tying up a lot of margin, I immediately stopped out, but I did hold on to this in one of my large cash accounts, I should say. And so far so good. It's made a nice little run higher. I think today notwithstanding was getting whacked a few minutes ago. But I ended up selling half at this level here, and I'm going to trail a stop on the remainder. Now here's another example. Day 1, you can see that sets the high for the week so far. Day 2, day 3, day 4. Now on day 5, the day 1 rule really doesn't matter because the close is both above the highest close, in other words, a new closing high, and it also took out the day 1 high. So I bought on that particular day. Let's see what happens. Kind of meanders back and forth, pulls back in, and it knocked me out of the position. Winston Churchill once said that success is moving from one failure to the next without any loss of enthusiasm. I looked at this chart at the end of the day and said, you know what? I like it. It's now a first deep retracement. I'm going to go back in. And I triggered in right here on that first deep retracement. And I am currently long this particular stock, ZH. Okay, let's take a look at another one. Day 1, day 2. So far, day 1's the high, right? Day 3 takes out the day 1 high. So that's no longer part of the rule. Day 4 and day 5, new closing high. So we buy on this particular day. Now, we did talk about all 3 of these in the Facebook group, just so you'll know. And it began to take off. And today, it's getting whacked a little bit too, like everything else. Now, just real quick, one thing I've been looking at lately is that a lot of times these IPOs, if they price them too high, and more specifically, if they begin trading and early trading much higher than where they were set to come public, and this right here is pre-market trading on StockCharts.com, then a lot of times, if they price too high, they're going to die. It's like they don't leave a little meat on the bone or whatever. I'm not sure exactly what the exact reason is, but I've seen this empirically. So notice the open is way up here, and it traded maybe almost 200 points above. Okay, so let's go IPO hunting. Now, what I'm going to do is I'm going to come over here to StockCharts.com, and my goal is not to show you how to use StockCharts. There's a lot of the people, as I often say, out there that could show you how to use it a lot better than I can. And I do use a lot of different tools in my business. And what I've done is I talk to the people at StockCharts and tell them what I'm doing elsewhere, and they figure out a way to do it with StockCharts. And this is where this IPO scan came from, and I'm pretty excited about this. So if you just type in IPOs and search, easiest way to get here. Now, if you look down here, it says predefined reports and chart galleries, IPO listings, one of the most popular uses of our data adjustment page, which is pretty exciting because that came from me. Not to be vain. So if we come down here, you see IPO listings. And what you could do is you could just copy this URL up here. In fact, I'll put this in the slides, so if you want to take a look at them. And then you could save these to a chart list. Now, I've done all that, and again, there's a lot of other people who know how to use StockCharts a lot better than me that can show you how to do these things. But I've created a watch list, brought them in the ACP, and let's start taking a look at some of these. Okay, what do we do? Well, this has only been out one day, so we do absolutely nothing. It might be worth watching, but for now, nothing's happening. So let's continue through these and check out some IPOs. Okay, RBLX came public here, and a buy at B would have been, let's see, 1, 2, 3, 4, 5 on that day there, because the day 2 high was greater than the day 1 high. Day 1 high didn't set the high for the week. Now, one little caveat that I didn't mention, I prefer them to be below $20 a share for the buy at B pattern. Now, in more recent years, I've been a little bit more lenient with that, and I'll go as high as possibly $30 a share. So every now and then you'll see me trading an IPO between $20 and $30 a share on a buy at B. Now, this doesn't mean that down the road I won't trade that IPO if it's at much higher levels. I'll buy an IPO at $200 or $300 a share or whatever if it sets up as a secondary pattern. So if we take a look at RBLX, you can see that it has taken off in more recent times and pulled back. So it might be worth a shot as a possible pullback type of play. Now, this one in more recent times has had a decent run higher and pulled back deeply. This is a bit of a dangerous, kind of volatile stock to trade, but I do find it interesting, and it might be something that we want to put on our watch list for a secondary type of setup. A pioneer setup or a primary setup would be something that sets up early in the process, such as a buy at B, even though a buy at B could set up possibly months down the road. But in a lot of cases, they trigger on day 5 or within the first week or two of trading. So let's just keep looking at these stocks. Now, you can see this one so far has just kind of died out, okay? So there's nothing to do on that one. If they don't go up, don't buy them. It's kind of like the old Roy Rogers saying, buy stocks that go up, they don't go up, don't buy them. That's kind of the whole premise for the buy at B. Now, ignore this day here. This is a pre-market trading. Again, you can see this one takes off 1, 2, 3, 4, 5, less than $20 a share, good range. We just talked about this a few minutes ago. I did buy it on this particular day here, got stopped out. It made the first deep retracement, and I'm long again. And up until about 20 minutes ago, I was feeling pretty darn good about that trade. Now, let's keep. Okay, here's one, as I often say, price too high, they're going to die. So it comes public and then absolutely implodes. There's nothing to do in this particular case. Maybe it'll get its act together. You could bring in some classical technical analysis at this point in time and say, well, it's going to have a hard time getting through its overhead resistance at 25. So for me, I would actually like to see this thing make all-time highs and then begin to pull back before getting too excited. Okay, let's take a look at this one. Now, this technically was a buy at B back here. Day 1 set the high for the week, so it'd have to close above that high this day here. But it's trading well above the 20 and even the $30 rule if you want to use $30. So we pass on that. If you played this pullback here, hopefully you got stopped out without getting hurt too badly. But now that it's begun to implode, there's nothing to do with this particular stock. Now, when I first did my IPO course back in 2014, I told everyone just to ignore these acquisition companies because they all just kind of chopped around, and most of them went down longer term and didn't do anything. But in more recent times, as you likely know, unless you've been under a rock, these acquisition companies have been really hot. SPACs is what they call them, SPAC, Special Purpose Acquisition Companies. So I do trade these things, but with something like the buy at B, one of the caveats, and I'm not holding back on, just a few little caveats I want to flesh out as I see them in the charts, is that they need to have a decent range. A stock needs to have a decent range. And you can see the stock was only in about a 50-cent range, and then it's imploded since. So there's nothing to do in this particular case. So let's take a look at this one. You can see that a buy at B would have gotten you long. Actually, let's see, 1, 2, 3, 4, 5 on this day here. However, it's at much higher levels, so that Pioneer trade would not have been taken. Now, here's one that did play the buy at B, got stopped out at a really nice profit, and then I went back to the well. Now, you gotta be careful going back to the well, but if you have a legitimate setup, then it's worth trading. In this particular case, day 1, day 2, day 3, day 4, day 5. I was long on this day here. Was a little concerned about things, though. The next day, things weren't going so well, right? But then took off nicely, took partial profits, and stopped out of the remainder. Now, as you can see here, if you've been paying attention to the basic methodology, we've got a nice trend higher, longer term, a nice accelerated trend, somewhat shorter term, a pullback, bit of a TKO type of move. So this pullback here, this was actually a service recommendation, if memory serves. I am currently long this one, and was actually pretty happy today, notwithstanding. PLTK. Now, this would not be a buy at B because it's above $30 a share, okay? $20 a share is a general rule. $30 it would be the max on something that you really like. You can see this high here sets a high for the week. The good news is it never did close above that high, so even if you were using some discretion and saying, well, I'm going to try that buy at B, even though it's a little bit higher, it never did close above the day 1 high. And this is amazing to me just by making sure if day 1 sets a high for the week, it also has to close above that high, and it never did close above that high, and it died out, as you can see. No capital was put into harm's way. Okay, on this one, I'll have to admit that I really didn't do a good job trading it. Day 1, day 2, day 3, day 4, day 5. I did buy on February 3rd on that close, and I wrote it out, and I wrote it all the way down to here. I probably should have stopped out of that, so shame one of my clients, because sometimes I admit guilt and say shame. He sent me the shame bell, and it literally has the word shame printed on it. And when we go back to live, I'll show you guys the bell. Anyway, I ended up scratching out this trade. I'm not sure exactly when I exited, but it just wasn't performing, and I decided to get out of the trade. And maybe you could argue that I might have micromanaged a little bit. I just didn't handle this trade very well, so not proud of that one. Let's take a look at a few more in here. This one comes public and then just dies out. Nothing to do. Buy stocks, they go up. If they don't go up, don't buy them. Now, this stock's above $30 a share, so I probably would pass on the buy at B. It's only 3 days. Day 4 would be Wednesday. Day 5 would be Thursday. So possibly on the close of Friday, it could be a buy at B. Would also have to take out the day 1 high. However, I don't like the fact that it is above $30 a share, and the range isn't huge on this. I suppose it's big enough to trade. But again, it's above $30 a share. So what I would do is I would wait to see if this thing can rally and then look to play the first pullback. Now, here's a poster child for what could happen. And as I think I said earlier, sometimes they price too high, they're going to die. This one just came public. Too high of levels. This is the pre-market trading. And then notice that on the first day, it sets the all-time high. And that amazes me too. First day can often set the all-time high and these things. And as you can see, imploded. So even if you were playing a buy at B, which you wouldn't because of the price, but let's say 1, 2, 3, 4, 5 plus the 1 day high, it would have to trade above this level here. Now, again, like I said earlier, down the road, this might be worthwhile. It might bottom out and then take off again. Sometimes IPOs come public maybe a little too early. Maybe they get their stuff together. There's a plethora of reasons why they can die out like this, and I call it the die and then the fly, also has like a phoenix characteristic to them. Sometimes I talk about the phoenix pattern. That's when you have a stock that just goes down in basis forever and then makes a bow tie or a first thrust type of transitional pattern. OSCR, you could see it came public at higher levels. So in a case like this, I would not trade the buy at B, which would have triggered on this day here, if I'm seeing the full chart. Yeah, so you can see, but the fact that it was higher priced, I would not trade it. Remember I said earlier, price too high, they got to die? And that's what happened there. Somebody, well, I can't say it, it's PG-13, but somebody messed up. Let's just say that on that particular one. It's amazing to me, they either take off in the first week or so, or they die out. And that's a fairly reoccurring pattern. ALHC, I did get long this one on buy at B. I've subsequently stopped out. Day 1, day 2, day 3, day 4, day 5. I bought it on this particular day here, and I stopped out. I just didn't like the market action earlier today. I'm not micromanaging. It's just that with these buy at Bs, I tend to be a little bit more, or tend to expect a little bit more performance sooner on. Okay? SGFY, day 1, day 2, day 3, day 4, day 5. Buy at B would be here, but what? It's too high, okay, for the buy at B, and as you can see, it's died out since. It doesn't mean that these stocks aren't candidates down the road. They might get their act together and be worthwhile. You just don't want to go in for a pioneer setup. In this particular case, great example, buy at B would have been back here, but it's like 50 bucks a share, so you would have passed on that one. Well, I'm going to play the first deep retracement, like Dave says, makes 100% retracement. There's nothing to do, like the one we showed earlier, and then you can see it dies out. Now, down the road, a bow tie or something might be worth trading in a stock like this. Sometimes they die out and they base for a while and then begin to take off, and that could be a great pattern. Core we talked about. Core was the mystery chart, ran up nicely, and then came all the way back in. Yeah, it would have been a buy at B back here, but look at the price, too high for a buy at B. LDI, nice little run up here, comes all the way back. May or may not have played this first little pullback here, but as you can see, it really hasn't done much since. So a stop would have probably taken you out here, or if you're still long, you should be holding on with a stop somewhere below the low end there. Now here's an acquisition company. Range is kind of tight on these guys. Not that I won't trade an acquisition company. We actually have one in the recommended list for today with parameters, but for an acquisition company to work, it needs to rally and then set up as a pullback. Vizio, we're actually long Vizio. 1, 2, 3, 4, 5 would have been the buy at B, but that really hasn't triggered yet, or it hasn't triggered yet, I should say. However, it did make a nice little pullback in here. First pullback or first deep retracement. Good pattern to trade. This is not an extremely deep pullback, but a decent setup nonetheless. And we're right around break even on that. If you go back in slides, you should be able to see the open portfolio where we have Vizio in there. Another acquisition company, easy for me to say. Watch the range on these things. 9.80, 10. That's only a 20 cents range, so there's nothing to do with that. Now, if it begins to rally, then it might be worth a shot. Another one of these die and die patterns comes public first day. Look at that. And then it implodes. And if you only walk away with that don't jump in on the first day of trading, wait at least until day 5, I think you're going to save a lot of money in crappy stocks. Again, thin range, one of those acquisition companies, thin range. Same thing there. This one's kind of interesting. You see it took off in here, and then it's pulled back rather deeply. This was on my list coming in to today. Actually, it's now April 21st as I'm finishing this recording. So that would be a first deep retracement. This one looks kind of interesting. I was actually long this one. 1, 2, 3, 4, 5. And I got knocked out of it today. With the buy at B, sometimes I'm a little bit more aggressive as far as not sticking with the position if it doesn't work out. Whereas in the core methodology, I'll give things a little bit more room. Now, let me just back that up 1 second. I'm a little bit more aggressive in my more aggressive active trading account, and my cash accounts, such as like an IRA, I'm a little bit more lenient with some of these, and I'll give them a little bit more wiggle room. One thing I was thinking about is if you want to get a feel for how to set stops with IPOs, I did a show, I think it was 2 weeks ago, Dave Landry's The Weekend Charts. You can go to youtube.com/C as in custom/Dave Landry. So here's another one. Range is really too small on this one. So let's keep going. 1, 2, 3, 4, 5. Buy B would be here. You've got decent range. Unfortunately, as you can see, the price is just too high, or fortunately in this case, and then it just died out. So this was a trade that should not have been taken. When I talk about range, I'm talking about the lowest price for the first week of trading to the highest price for the first week of trading, or if it takes a little bit longer to trigger, just the entire range of the IPO. I want to see some decent range in the IPO before I consider them for trading. So this should give you a feel for what I'm looking for in IPOs. Obviously, there's a lot more to it than what I showed you today, but if you start with what I showed you, I think you're well on your way. Don't buy the ones that go down, okay? Pioneer setups, the reason I call them pioneer setups is because, like the American pioneers, you're either going to get the gold or the arrows in the back, and I think that the chance for the gold with something like a buy at B makes it all worthwhile. If you're interested more in IPOs, I do have a complete course on IPOs. Also, if you want to see things happen in real time, in the Facebook group, we often bring these up. We being me and a group of other traders. The group is free, but you do have to be a gold member of DaveLandry.com. As usual, I want to thank all you guys and girls for watching today. If you need to find me, DaveLandry.com/contact. If you want a bunch of follow-up information, enough stuff to keep you busy for a long time, get to know me first before you buy anything, and that way you'll know what I'm all about. Go to DaveLandry.com/StockCharts. Put your information in, and I'll send you enough stuff again to keep you busy for a long time. So thanks again for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.